Welcome back to Intellect Insight. Today, I'm going to show you how you can start investing with little money, yes, even if you have just $10 or $100 to spare. Let's dive in and build your path to financial freedom. Part 1. Why you should start small. You might think you need thousands of dollars to start investing, but that's not true. In fact, starting small can actually be an advantage. It helps you learn, make mistakes without losing big, and grow as you gain more confidence. Investing is about time in the market, not timing the market. Even small amounts of money can grow significantly with compound interest. The earlier you start, the more time your money has to grow. So, if you've got even a little, now's the time to start. Part 2. Types of investments you can start with. Okay, so where do you put your money? Let's break down a few simple ways you can start investing with small amounts. 1. Stock market via apps. Nowadays, you can buy fractional shares with apps like Robinhood, M1 Finance, or Webull. Fractional shares mean you can own a piece of a company, even if you don't have enough to buy a full share. So if a stock costs $1,000, you can still buy $50 worth of it. 2. ETFs, exchange-traded funds. ETFs are great for beginners because they allow you to invest in a bundle of stocks or bonds, spreading out the risk. You can invest in ETFs with small amounts, and they're available on most brokerage platforms. 3. Robo-advisors. If you don't want to pick individual stocks, robo-advisors like Betterment or Acorns can invest for you. You just set your goals, and they'll handle the rest, even with as little as $5. 4. Real estate, REITs. If you're interested in real estate, you don't need to buy a whole property. You can invest in REITs, real estate investment trusts, which allow you to invest in real estate with small amounts of money. Part 3. Step by step on how to get started. Now that you know your options, let's talk about the actual steps to start investing with little money. Step 1. Choose your platform. Decide whether you want to invest in individual stocks, ETFs, or use a robo-advisor. Pick a platform that offers fractional shares or low minimum investments. Step 2. Automate your investments. Set up automatic deposits. Even if it's just $10 a week, it adds up over time. You'll build the habit of consistent investing. Step 3. Diversify. Start by diversifying your investments. Spread your money across different types of assets like stocks, bonds, or ETFs to lower your risk. Step 4. Stick with it. The key is to stay consistent. Don't get discouraged by market ups and downs. Investing is a long-term game. Part 4. Final tips and wrap-up. Before we wrap up, here are a few final tips to keep in mind. Step 1. Start small but stay consistent. Even if you can only invest $10 or $20 a month, it'll grow over time. Step 2. Avoid high fees. Look for platforms with low fees, so your small investments don't get eaten up. Step 3. Reinvest your dividends. If your investments pay dividends, make sure they're reinvested for even more growth. Step 4. Do your research. Even small investors should educate themselves. Watch tutorials, read articles, and always stay informed. That's it for today. Drop a comment if you have any questions or ideas for future videos. See you next time on Intellect Insight. Happy investing.